Yeah, morning, Trace. We've just seen US markets close. We are finding a bid back in duration, with certainly in the belly of the curve with 5-year treasuries finding good buyers playing through. And it's having big gyrations coming through in the FX market. We'll continue to see that US dollar under a bit of pressure here, and that's supporting equity markets as well. So we go through the market moves. I'll see you on the flip side. Yeah, hi traders, welcome to the new trading week ahead. There are a few landmines and event risks which we need to navigate our portfolio through, so hopefully we can make it aware of that and have a look at how interest rate markets are priced as we go into the new trading week. And I want to start with Japan, because I think it's interesting because we have started seeing some sellers and shorters of 10-year JGBs. We can see them sitting at 42 basis points. They've started to move up, as we've seen with 10-year swaps in Japan as well. Now, that's obviously interesting as we go into that Bank of Japan meeting later this month. Now, as a result of this and for other factors with a slight rise in bond volatility, you have seen the yen shorts being unwound. The yen-funded carry trade has been looked at pretty closely, specifically against some of the sort of high beta, high carry EM currencies that we've been seeing. And I think some of the data in Japan's been better. Certainly if you look at the Tankan report, where we saw 5-year inflation expectations for Japanese corporates above 2% once again for the fourth quarter in a row. And there may be some people looking to bet that we may see some tweaks of YFCC as we go into that meeting later this month. So obviously watching the yen very closely as we go through this week. Also watching that dollar exposure, because we did see a bit of a liquidation coming through on Friday after the payrolls number. And this week ahead, we've got the CPI numbers coming through. Now, the market is expecting 0.3% both on headline and on core month on month. If you look at that on a year-on-year clip, you can see core expected to come in around 5%, and that's down from about 5.3%. And the headline number expected to drop down to base effects, down to 3.1%. Now, I will say that if we're looking on a month-on-month clip, if we're looking at it services X shelter, the market's looking for that to pull back to about 0.1%. But I think if we're looking where the weakness is going to come from, it's going to be on the core goods side, where the market's looking for used cars and new cars to pull back because of the base effects kicking in there. So one thing we are watching very closely, and we've got poor PPI numbers coming through as well, with the market expecting final demand year on year to be up 40 basis points and on a core basis 2.6%. Now, if we have a look at the rates markets, we can see for the next meeting on the 26th of July, 22 basis points being priced in there. Now, that was sort of about 2 basis points last week. So there wasn't really much of a move around pricing last week, despite all the plethora of news that came through. And we're currently seeing around 5.3%. So yeah, I expect, given what we've got this week, it would take a really pretty dark CPI number in terms of coming in way below expectations for that to move the dial. I think the market's pretty convinced we're going to get a 25 basis point hike. Where we may see some jostling in positions if you go into sort of September and November, where we can see the step ups are pretty mild there. So we may see, for November, for example, where we've got terminal pricing at 543. We're pricing in an extra sort of 12 basis points or so, 13 basis points. Yeah, you may see that number come into fruition depending on the outcome of the CPI and the PPI number, because once you've got CPI and PPI in play, typically you can make a pretty good assumption of what PCE inflation is going to be and the deflator is going to be at the end of the month when we see that one coming through. So one thing we are watching very closely. In Australia, you can see that the market is pricing the next central bank meeting the 1st of August. We've got about 16 basis points being priced in there. So on balance, the market's saying we probably expect a rate hike. And this week, I think there's some tier 2 data. We've got the Westpac consumer confidence numbers, NAB business confidence. I don't expect them to sort of move pricing too much. I think we're going to be watching RBA Governor Lowe speaking throughout this week on Wednesday at 10 past 1. And he may give some guidance coming through. But I think we're really sort of a data-dependent mode now. And we need to see the employment data that comes out on the 20th and also the Q2 CPI numbers, which come out on the 26th. But if we have a look at the rates curve, you can see terminal being priced out for next year around 470, which gives us about 60-odd basis points of tightening from these current levels. So the market's expecting 2 hikes to the peak, perhaps a little bit more there as well. Now, I think in terms of marquee event risks, you can't really go past what's happening in the UK. We are watching those jobs numbers that come out throughout the week, and also the wage data. The wage data is expected to drop back a little bit to 7.1% from 7.2%. But of course, we all remember last month when we saw that huge wage growth coming through at 7.2%. And that was part of the reason why we saw the Bank of England raising by 50 basis points. We've got some other splutterings of data points, manufacturing production numbers, industrial production numbers, but certainly it's that wage and jobs numbers that we're going to be watching very closely indeed. Now, we've got 44 basis points being priced in for the 3rd of August meeting, so it's pretty much a done deal. I think 50 basis points is pretty much a lock, unless we see a massive collapse in wages, which one suspects is not going to happen. You can see terminal pricing around 640 for next year. Now, we did see a big steepening of the UK rates curve, and of course, last week we did see 10s push above the levels they were trading through when we got that spike up after the Trust mini budget as well. So we are watching UK gilts pretty closely throughout the week as well. In Europe, you can see that we've got 23 basis points being priced in for the 27th of July. Not a huge amount of data to really drive us this week. We've got ECB speakers playing through. But yeah, I expect European rates to be fairly sanguine this week. You can see terminal priced at 391. And in New Zealand as well, we've got a rates decision playing through there. I think no one's really expecting a hike there. The sort of swaps market's pricing around 3 basis points, so not expecting any major movement there. Where we are expecting potential movement is in the Canadian dollar. If we have a look at the Bank of Canada that comes out on Wednesday, the market's expecting about 68% chance that the Canadian Central Bank there raise rates by another 25 basis points. We've got 16 of 24 economists also calling for that one as well. So one we're watching, do keep an eye on your Canadian dollar exposure over that meeting if you're running one. And in China, we do get a bit of data coming through this week. I think the market might give it a bit of a wide berth. Even if we get a poor number there, given that we do have the Politburo meeting later this month, and the market's expecting some pretty punchy stimulus to come out of that. But we do have the aggregate financing numbers. We've got trade balance. We've got CPI and PPI numbers there. So again, probably more one for the Aussie dollar traders, and maybe we might see some gyrations coming through in Chinese equities. So another big week ahead. We are watching this bond market very closely, especially 5-year real rates in the US. I think, if they continue to move higher, then I think equity markets have got lower. But we are starting to see a few people out there, a few funds starting to look at duration a little bit more positively, certainly in 5-year treasuries. We'll see the price action there. It could be very telling this week indeed.